Hi, guys. Welcome back to the Max Spence Business Podcast. Today, I have a very special guest. His name is Justin Salazar. It's great having you on the show, Justin. I'll do a little intro for him. So this guy is really awesome. I met him probably, last year. He's a commercial real estate agent. He specifically does multifamily. He's a young guy. I believe you're 25 years old, right?
Yeah, just turned 25 at the beginning.
Yeah, just turned 25 years old, doing commercial real estate and some pretty big deals with commercial real estate. And he also has invested in his own multifamily portfolio as well at 25 years old, which is pretty crazy to think about it, that, at 25 years old, you already have your own, couple multifamily properties. So it's great having you on the show, Justin.
Thanks, man. Thanks for having me. Appreciate it.
Awesome.
Like
awesome.
I said, you're my first.
Awesome. Yeah. So I'm excited for this as well. So why don't we jump into, a little story about, who you are, where did you grow up? Are you from Ottawa? Are you from different parts of, Canada? And sort of what got you into real estate and then commercial real estate?
Yeah, for sure. So yeah, born and raised here in Ottawa. I actually went to school for firefighting, like fresh out of high school. And it's kind of funny how I got into real estate is actually my girlfriend was just in the other room. When we first started dating, her and her family would always watch this show, $1 Million Listing New York. And I'm not a big TV guy. And they kept telling me, stay, just check it out. You'd like it. One day I finally gave in, and they kind of put the bug in my ear, like, oh, we think you'd be good at that. And I ended up just getting into it from there and not looking back. And it's been, I think, close to 4 years now. I got in when I was 21. Started very small. Like I would drive to Kempville for rentals and stuff like that on a Sunday, right off a whim. And over the last year and a half, I've been doing a lot more commercial. So just recently, I made the switch over to do full-time commercial and do just focus on the multi-res stuff.
Oh, okay. Awesome. Yeah, that's incredible. And yeah, you've only been in the, you've been in the industry for a small amount of time, but have done some pretty exceptional stuff for the time that you've been in real estate, which is incredible. I know you from, Justin had, a 5-building unit, or I think it was a 6-building unit, listed. I think it's like near downtown Ottawa. It's
center town. So it was right on LeBreton.
Yeah. So that was a pretty awesome listing. But yeah, so pretty much I'm from your LinkedIn, and when I previously met you, you were with EXP Realty, I believe.
Yeah.
And then you just switched over to I believe it's Cobel Commercial.
Yeah, Cobel Commercial Real Estate. So they're a small boutique commercial real estate firm here in Ottawa. Graham and Mark are the owners. I think you connected with Mark, and that's how we connected.
Yeah.
But yeah, they're great. Like they've just, over the small amount of time that I've been there, they've kind of taken me to a whole new level, and we're continuing to grow every day.
Oh, okay. Awesome. So what made you jump because I've met a few other commercial real estate agents in Ottawa, and some of them are doing industrial, some of them are doing office space. What sort of swayed you towards, doing multifamily?
It was kind of like a slow progression. Like we talked about right before the podcast started, like I had a lot of smaller clients that were just doing, single family homes. Oh, we want to rent it out, this and that. And then it went from a duplex to a triplex to a fourplex. And it actually all really started. I had I think it was an 8-unit apartment, like little complex in Orleans for sale. And I had a buyer come in off Kijiji from Toronto. And this guy, he's like, oh, I'm ready to spend 10 million and this and that. Cool, man. Like I always give him the time of day. I always give everyone the time of day, but he actually showed up, and he is another big part of the reason how I got into multifamily is like just seeing the numbers that he was doing and bringing in such a small amount of time. It's like, oh wow, this is something I could get behind. And then from there started digging into it deeper. So started listening to Grant Cardone and a bunch of guys from Canada and Ontario, like Breakthrough Real Estate Investing Podcast, all those guys. Just piqued my interest, and then started taking it to the next level.
Oh, okay. Awesome. Awesome. Yeah. And one of the things that I really like about you and other people that have this trait is that they give, like, even how busy they are, they still are genuinely good people because they give time to different people, even though, it might seem like, oh, this might not go anywhere, but, giving that time to somebody could turn out to be actually really, really beneficial for both parties involved.
Yeah,
When this guy was probably, from a Kijiji ad saying like he's going to spend 10 million in your head, in the back of your head, you're probably thinking like, is this guy really like, is he really going to spend 10 million?
yeah. Well, it's a funny story actually, because he's actually become a really good friend of mine too.
Oh, okay. Awesome.
He came in on, like I said, on Kijiji, I'm looking to spend 10 million. I was still like new in the business. So like that actually wasn't even in the back of my mind. Like it was kind of like, okay, 10 million is a big number, but like I was just super hyped about getting a huge buyer like that.
Yeah.
And it's funny, like to this day, I still haven't actually done a deal with him. Like we've sent out multiple offers and stuff. That's fine. But I've sent, like I've closed deals with his brother, his cousins, family, friends. Like his mom is even a client of mine now. So like it trickled down, and like a lot of my business does come from him. So
Yeah. That's amazing. Yeah. It's just like those, it's weird how life just works with those small little time, like, you spend 20 minutes in some conversation. Next thing you know, that just just explodes your life, and, financially speaking, or with new connections and other stuff like that.
yeah.
But I really want to jump into, so how do you go about, because you have a lot of knowledge, and I've had people on from other investors, but a lot of them I've sort of connected with are in the US, just because the thing I find really interesting is that a lot of US investors are much more public, and they're much more, they have a lot more publicity with them, and they're really good at marketing themselves and PR. And I noticed for Ottawa, and maybe Canada, it's that I find that a lot of investors are sort of, they don't really say too much about what they do. It's
Mm-hmm.
sort of behind, like, it's sort of like it's a closed little circle of investors, where I found with the US, there's a lot of people on social media, like Grant Cardone and other people like that, or on, like, they take a very heavy approach to marketing themselves on social media to find, potential investors or clients or properties and stuff like that. So you're actually one of the first, you're actually one of the first investors and slash commercial real estate. Well, actually, yeah. So investors that I've had on the podcast that specifically does sort of Ottawa real estate investing. So I want to ask you about how do you actually find your deals in Ottawa, and what's your process for that?
Yeah. So it's kind of a multi-level question. We got into that a little bit last week. But there's different avenues we take, right? Like cold calling is a huge one. I used to hate it, and I found once you start to get one deal or even one lead, it's addicting, right? Like you think, okay, well, if I got that from one phone call or 3 phone calls, however many it took, like imagine if I just sat down and focused. So cold calling is a big one. I don't do too much door knocking. I did it once, got a very solid lead out of it, and to this day we still talk, and hopefully we get something done there. Kijiji is a huge one that I was telling you about. So for example, like I'll go on rental ads in Ottawa, and I'll type in a specific neighborhood if I'm looking for one, and all the rental ads that come up, I'll just message them directly, say, hey, look, I'm interested in your building. Are you looking to sell? Like it depends, right? Like if I'm looking to buy it myself, I'll pitch it that way. If it's for a client, I'll pitch it that way. If I'm looking to list it, then obviously I'll pitch it that way. It's difficult when you're playing both sides, right? Like I have clients that I have to service. I have, I want to list things, but I also want to buy things for myself. So Kijiji is a big one. And as realtors, like we have access to multiple different tools. So a lot of the times if I drive by a building and it looks good, it looks like, maybe it's for me, or like I said, a client, I'll just Google search that address and hunt down the owners. And if I can get in contact with them, that's actually how I found my deal. So
Okay. Okay, awesome. So what would you say is like the best ROI? Has it been the cold calling, the Kijiji, sort of messaging people over the Kijiji ads, or doing just driving around looking for these properties? I know that, like, if people, like, because I used to be in real estate for a bit, and I know the systems that real estate agents have, that they're really good with, like, geo warehouse, and you have the MLS, so you're able to actually look up a lot of great information. So to an
Yeah.
investor that maybe doesn't have that access to that stuff, it might be a little bit harder, but you could still probably, look up that property. And I did that for a building that I was just looking at. And it actually came up for the building. It came up for who actually owned that building. It was an investment company that owned the building. But just by typing in the address, you'll find information about it. So what would you say is the best ROI of your sort of time?
For me, the two biggest ones, I can't narrow it down to one. Like the two biggest ones have been cold calling and Kijiji. Because even Kijiji, like if it's not that person that has something, then I'll swing it. Like it basically starts like, hey, are you willing to sell this property? Yes or no. From there, it really depends on the person. But if they say no, okay, cool, you don't want to sell this one. You have something else in your portfolio that you want to sell. No, okay. Do you know anyone that has something they want to sell? So with Kijiji, I found they respond a lot quicker because they have an ad for rent, right? They're assuming that I'm a tenant, and a lot of the times it does pique their interest. Like, oh, okay, well, I haven't thought about it, but maybe for the right price, I'll do it. And
Okay, awesome. And what have you sort of seen if it's a management company? Because I know with some of like once you get into some of the bigger units, like maybe 5 and above or 6 or 7 and above, they start to get managed by management companies. What do they sort of do they sort of respond to it, or do they sort of like block those
so
messages?
I've never really had responses from management companies, maybe a couple times. My pitch for them is a little bit different. But you got to keep in mind too, like with the management company, it's like their job that I'm almost going after, right? Because they think if someone's going to buy the building, we're going to get fired. So no, they don't want to sell.
Yeah.
And I work with a few of the management companies in Ottawa too, or have relationships with them. It's a lot of networking with those guys, and it does help, right? Like a lot of the management companies, they'll say, oh yeah, like, we're looking to get rid of this soon, or I know this seller is looking to get rid of this. So when I see them on Kijiji, I tend to stay away from them. But if it's a smaller one, like someone that just, it's not a big company, then yeah, approach them for sure. Like you never know, right? Like it goes back to never say no. So
Okay. Yeah, that is some pretty good advice. So, so with I want to ask you another question about that. So what sort of I know for yourself, because you're just starting the process of accumulating properties. What is sort of your range of multifamily units that you're sort of going after? Is it sort of 5 to 10? Is it 12 and above? Is it 30 and above, or 100 plus, or what?
Really anything, like, right? Obviously, you got to start somewhere. So I just picked up my first property. It was a 5 unit. I got a really good deal on that. Now it's on the outskirts of Ottawa, but I basically got it at a 50% off price. So with minimal work, well, I say minimal, like it physical minimal work, but with tenant turnover and everything like that, the building will double, and I'll be able to pull out some serious equity. And then from there, I'll take that and I'll hopefully get something bigger. Or just even within the city, like I'm okay to do the outskirts as long as the numbers make sense. And that's what a lot of investors like in Ottawa, they don't realize. Everyone's so stuck on go within Ottawa, go get something that's going to appreciate like within the city. And that's great. You know what I mean? But as you know, Max, like the market we're in here in Ottawa, it's so competitive. And like we were talking about before it started recording, like cap rates people are buying at like 4.25. Like it's so hard to make money and add value there. So if I can go to the outskirts, get something for a fraction of the price, but my refinance is still going to come in on a really sizable level, like why would you not do it?
Yeah, that is some pretty good advice. So I want to ask you now. So you focus on the outskirts or wherever sort of the deals make sense. Do you raise capital? Or is it your own sort of capital that you use?
Yeah, so it's been my own. Well, I have one property, so yeah, it was my own money. But it's crazy, like from just buying that one property, the amount of people I had reach out to me and say, hey, we should partner on something and this and that. Like, it was insane. I'm not necessarily like, I'll partner with someone if we know each other on a deep level. But I think just to jump into partnerships and capital raises and stuff, like it's not really my forte. So I'd have to look into that and approach it differently. But yeah, it's been my own money. I've been fortunate of that. Just saving from work. So.
Oh, okay, awesome. So were you like that was the first investment property you got, and it was a 5 unit. Were you
Yeah.
nervous to go after that at all, or was there any sort of fear in the back of your head to sort of, and that's where I find a lot of people get stuck is and I've talked to quite a few investors that like I talked to this one guy who's like 20, I think he's like 25 or 26 now. And he's
Yeah.
just through Windsor. He's in Toronto, but he buys
Mm-hmm.
property in Windsor, and in 22 months he scaled to 20 properties. And he said like the biggest thing was just getting that first property. And once he got that first property, it was just like he refinanced it and just started going. And then he brought investors in, and it just like kicked, like the wheels just started turning. So
Yeah. Like I think
how did you how did you actually find the process of going through that?
Yeah. So like just going back to your capital raise thing quickly, like I think there's definitely a time and a place and like a certain level where you have to do it. So not like I was shutting it down or anything like that, but I think, once you get to a certain place, for sure. And then for my deal, like, I don't know, it was weird, man. Like, I don't know if it's because I was doing, like, if I sell these things every day that I was a little bit less nervous. Or maybe it was just, doing the due diligence well, but I kind of looked at worst case scenarios for this specific property, and like the price that I got it at, and we can get into that if you want. I was like, there's no real like loss here. I really couldn't see like a downside. Like even with not getting the rents up, with capital expenditures, like I was still cash flowing, not a crazy amount, but I could still cash flow. And like I looked at my exits, and there was an exit kind of every which way. So I think it was a mix of just being in deals every day and planning for, okay, what's the worst case scenario, which made me pretty comfortable. So
Okay.
yeah, it was weird. Like I thought I would be way more nervous, and at the beginning I was. Like there was a point where I was like, do I do this? Do I do it? And then like again, just thought about it, and I'm like, just do it. Like at the end of the day, just do it.
Yeah. Yeah. Okay.
Yeah.
Awesome. Yeah. That's what when I was talking to the Austin was the other investor, and he went to a few events, and he had some mentors, and he was asking them, he's like, should I do it? Should I do it? And they were just like, just do it, just execute on it and just do it. Cause they're like, you'll learn so much from the process. Even if everything goes sideways, you'll learn so much from it. And you'll get over that fear of just starting it and doing it, which is like the biggest thing that holds a lot of people back.
Yeah. 100%.
So I want to sort of move now to, did you ever have problems with any like, maybe this might be for bigger properties that you go after or anything like that. Did you have a problem with them, be taking you seriously for like, hey, like I can actually bring somebody to close on this, or I can actually close on this myself? How have you sort of managed those waters?
Yeah. No, like to be honest, man, I didn't really have any troubles with that. So I'll give you a bit of the background. So I sold a property like 5 minutes further east from where mine is, 5-10 minutes. And, through the viewings and the inspections and the appraising, like I kept driving by this property. I'm like, looks like a good property. Like I should look into that. So I found the owners, couldn't find their phone number, but I found them on Facebook. So I messaged them on Facebook on Thursday, had it under contract Saturday. And like originally I had 3 months for conditions, and the lawyers saw the deal, and he was like, no, let's shorten that up. But I think just the rapport that I was able to build, maybe a motivated seller, they were okay with, like, they were pretty comfortable with me. Which I was surprised, because I mean, we're both younger guys. Like sometimes depending on the person, it's hard for them to take you seriously. But
Yeah.
I mean, I think the deposit that we put down was it was, I say, significant for the deal. It was significant. That made them comfortable, and the fact, I think that I do this every day for a living, made them much more comfortable than if I were just some random Joe Blow coming in off the street saying, hey, I want to buy your property, you know nothing about me. Like I think telling a story is huge too, to any perspective. So
Yeah, that is very true. So do you have any tricks that you use to you don't have to tell them if you don't want to. I know that each
No,
sort of real estate
I'm
agent
an
has their
open
own.
book. I'm all yours.
All right, awesome. I was just wondering, so do you have any tricks for when you're with a buyer, or you're looking to buy something for yourself? Do you have any tricks or tips to sort of win deals and sort of position yourself as the best candidate to secure that property?
Yeah. Again, like there's a couple different levels to this question, but it depends. Like if it's on market right now, um, I think just coming in at the best price and the most like little amount of conditions or no conditions as possible is going to win. But if it's something off market, like it goes back to telling a story, right? Like for my building, I just told the sellers who I was, what I do, what I'm looking to do. And like being young has its downsides, but it also has its pluses, right? Like I think for these guys, they were older, they were looking to retire, and just to see someone younger coming in and doing what they did, it hits that emotional chord, I guess, in them too, right? So like they almost want to help you. They look at you as like a child almost in a sense, right? Like, okay, we did this, like we just want to help you grow and help you do that. And if you can, position yourself to a point where they like you and it's genuine and they see that, then I think it's much easier, and that'll trump kind of most of the stuff that other people have to bring to the table.
Oh, okay, awesome. Yeah, and I've heard that a few times from other
If
real
that
estate.
answered your question, sorry, I
Yeah.
rambled a little bit, but
No. That was a great answer to the question. Yeah, and I hear that a lot from other real estate agents when they're putting, like, this is on the residential side and as well, but they say really telling that story and having something that sort of different makes you sort of different than
yeah,
the other
yeah,
competition, and making, because people, like, at the end of the day, people want to sell or buy from people that they like, right? That's
yeah,
like at the core of it, people like to do business with people that they like. So if you come
yeah.
across with a great story, which you did, then it probably helps a long way.
Yeah, and
So
I think too, like it's also, sorry to cut you off. Like I think it's
no.
also like in the multi-res game, at least, like it's people like it's hit or miss with who you talk to, but like most of the time, the current owners of the building want to make sure that their tenants are taken care of too, right? So you know, I'm not some big bad developer who's going to come displace everyone and tear down the place and that. So I think that helps as well.
Oh, okay, awesome. So now jumping to this sort of seller side, and you deal with different listings and stuff. So what are sort of multifamily sellers looking for in buyers?
That's a good question. I think again, they want someone that's gonna take care of the building, take care of their tenants. Like, because if you look at it, like a lot of these guys have built their legacy and they're trying to build something over time, and just they don't want to give it to someone who's just gonna run it to the ground, right? So I think being comfortable with someone who's going to take over and has the willingness and who's experienced, I think they're looking for that. But I think a huge part in like today's market is the money. Like Ottawa's going crazy right now, and like we talked about, again, going back to cap rates and net return and income, everything like that. Like the numbers, and I don't want to say it, but maybe I'm missing something. I don't think I am, but like it's hard to see how people are making these numbers work. Um, but like, yeah, back to your question, I think it's just being comfortable with who's buying it and someone who can actually close the deal.
Okay, awesome. And now, actually, to lead on to that question, sort of go into that is, so how has COVID affected the multifamily sort of market in Ottawa?
Yeah. So in terms of price and everything like that, like I don't think it's affected really at all. Like in multifamily is such a safe asset class. We're not talking about just student rentals or just rental buildings. Student rentals is a bit of a tricky game right now because obviously, like everything going on. But the biggest challenge that I've seen is not being able to get into units, right? And like, I have a lot of clients who trust me and trust what I say. So when it's a good deal, we jump on it. But it is difficult. Like, how can I tell someone, hey, put an offer in on this building? You haven't seen it. We have barely any information. It'll be conditional, so it's okay. But that's the biggest challenge. It's like tenants don't want to let us in right now. And I think with the second wave coming or that's here, um, it's going to make things much more difficult, like even than it was the first time around. So
Oh,
that's the
okay.
biggest
Okay.
challenge for
Awesome.
sure.
Yeah. Yeah. That's what I've actually, I've sort of seen, and I was looking at, residential, this is residential properties. And I know that residential and multifamily work a little bit differently, but even for like residential properties, like when COVID first started, there was like a block where nothing happened just because everybody didn't really know what was going to be happening. But then
Mm-hmm.
afterwards, the market just exploded. Like people
Yeah,
just kept, buying and purchasing properties. And then in the suburban area, which has a little bit more land, people were like buying stuff there just because, because of COVID, people want to be away from, lots of
yeah,
people and stuff, and like downtown and stuff. So I know that
yeah,
suburban areas exploded like crazy just with house prices and stuff, which is crazy with how Ottawa's went. Like in the past couple of years, Ottawa's done crazy from like, I remember when I was like first getting my real estate license, like Barhaven sort of townhouses were going around like, I think like 340 to 350. When I got into it, it was like just going around like the 400s. And now they're in like, townhouses in Barhaven, Canada are like 500 plus.
yeah. Like it's insane. Like it's funny. Like I sold my parents' townhome in Orleans in at the end of 2018, and it was sold for like 336 or 335, something like that. And they're like, we were having this conversation a few months back. They're like, oh my God, we should have waited and sold now. I'm like, no, like you gained like, because they bought a bungalow. So they gained probably 100, 200,000 in equity just from there, right? So you make it up. But yeah, like it's nuts. And going back to what you said, like people don't really care to be within the city right now, right? Like if everyone's going to be working from home, why would you buy a condo downtown for 450,000, let's say, like a 600 or 700 square foot apartment, when you go to the outskirts and buy a huge house for 450 and you have all this land and you're working from home and you're comfortable, right? So
Yeah.
even renting, like I think a lot of people are moving out of the core for who are renting too.
Yeah. So I'm really interested to see what's going to happen. And like, I know a lot of people are saying that like, oh, we're going to have the vaccine within a year or something. But like, to be honest, like the majority of vaccines are going to be like, I'm thinking like long term, like probably like, it's probably going to be 2 to 3 to 4 years, maybe like 4 years on the long term to have like something that have a vaccine that's like good enough to like, completely sort of deal with COVID and all this sort of strains. Cause
Yeah,
like while they're also doing this, it's like COVID's also like mutating and stuff, which is the crazy part.
yeah, yeah.
Which
It's
is
it's definitely weird right now, man, for sure.
yeah. So I want to jump to so because of that, what areas have you seen that are growing in Ottawa for multifamily? Has it been the west, the south, the east, or like downtown? What's sort of
Yeah,
happening?
I actually haven't done too much west. The majority of my clients like the downtown core or Westboro, like Hindenburg, trendy areas. Like they like to be within that area. But I have a few who do go on the outskirts, like Rockland, Wendover, Plantagenet, Winchester. So I think like I'm from Orleans, so it's maybe I'm a little bit biased, but like I did a lot out toward Rockland, and that area is growing like crazy. Wendover, there's a lot of like custom home and like nice home building, and it's right on the water, so it's a great area. But there's not too much commercial stuff happening, so that's obviously like a bit of a red flag if people have to travel a little bit further. But yeah, I think Rockland is huge. Like we're seeing a lot of growth in Rockland.
Oh, okay. Yeah. Yeah. Just sort of from seeing what's happening, it's just crazy because it's like areas you think that won't explode are just like popping now because
Yeah.
how people are like with like the suburbs and stuff. But
Well, even like Castleman and like Russell, Emerald, Limoges, like all those places, and Amazon just built that huge fulfillment facility, right? Like people, like you're getting a lot of land. Like the bang for your buck out there is so much more than what you can get in within the city, like from Orleans to Canada, let's say.
yeah,
So
are they building another Amazon center in Neil, like near to like it's like around Barhay, like Fallowfield or
yeah,
something, or like or
yeah,
somewhere around?
literally. Yeah, like right near is it Fallowfield? I can't remember, but I had a listing on Cobble Hill, and the Amazon facility was going right behind it. So
Yeah,
like
which which
street over.
which is going to be crazy. And I think I don't know, because I think that's like part of I don't know if that's part of the, because I know regional group is doing some like some huge master plan or some huge development. I don't know if it's that or it's another company that's doing that whole story, because I think it's like they're having a facility, and then because like when I drive back along, I think it's like it's 416 on like the left hand side when I'm like, well, which I'll be driving to like Kentville or something,
Yeah, yeah, yeah.
that's the direction. There's a whole bunch of like construction and a lot of like buildings that are going up alongside the highway, which is crazy. And I think one of them is the Amazon facility. But yeah,
Yeah.
anyways, to like sidetracking there, but I want to touch on now is so how do you underwrite these properties? Like when you know like do you underwrite them yourselves for your investors, or do they like to do it themselves, or how does that all sort of work?
So it's a mix of both, and like that's also a big reason why I went to Coble, is to learn like their underwriting process, especially with the size of deals that I was doing getting bigger. Just to have that support is huge. Um, but a lot of the guys I deal with, they like to just do it themselves. They have their way of doing it, which is fine. But what I've started doing somewhat recently, I guess, like is running my own formula and how I perceive the deal, and then taking my investors' numbers, and we kind of put them together. And it's cool to, I don't want to say it's like a competition, but it's cool to compare, right? And say, oh, like, did you miss this? Or maybe did we account for that? Or didn't account for this? So I would say most of the guys that I deal with are experienced enough that they take care of it. Um, the guys that aren't, like, yeah, we definitely, we dive into it on a much deeper level for sure.
Oh, okay, awesome. And I guess that's a good thing too. If you have two parties underwriting on the same deal, it's you're sort of getting like you're getting a double check there. So it's like if one person misses something, the other person can be like, oh yeah, actually that's not supposed to be there, or you forgot this or something, which is good.
Yeah.
So after you're done the underwriting, so what do you do for putting in offers? Are you putting in LOIs for some of these properties, or is it straight up purchase and sale, like a purchase and sale agreement?
It really depends. Like I think I've done maybe 2 LOIs. So most of the time it's an agreement of purchase and sale. Like um, for the stuff that I'm doing, it's I don't want to say it's standard. Like there's a lot of work that goes into it, but I've done it so much now that it doesn't take that much time to go through it. And I think again, like the deals that I'm doing, if a seller sees an actual agreement of purchase and sale with high level terms, conditions, deposit, closing date, all that stuff, I think they take it a little more seriously than if it's just a letter of intent. But definitely for like the bigger deals around like the 40 million plus, like yeah, you're gonna probably want to write an LOI and not go through the full offer, depending on how the listing side wants to structure it too.
Yeah, that's what I've sort of seen. Like at the smaller deal level, a lot more. It's a lot more purchase and sale agreements. And once you start to get to like let's say 30 to 40 to 100 unit pluses, I think it's a lot of like. Well, it also depends too, because I had a real estate lawyer on from Miami, and he was saying that he doesn't do LOIs. He just does purchase and sale agreements.
Yeah.
And his sort of strategy was different with it. But then I also know a lot of other commercial investors, like a guy I was talking to from Dallas, Texas. They do a lot of LOIs on properties just so they're able to fire out so on their end they're able to fire out a lot of LOIs and sort
Yeah.
of see like, hey, are you in, like with the terms, like the general terms, and sort of see if they're interested, yes or no. So it's a lot faster than if they're doing purchase and like, because like you probably know, it's like the purchase and sale agreements for bigger multifamily properties are quite extensive.
Oh
uh,
yeah.
and the majority of the times, so like once you get to that sort of level, it's usually a real estate attorney that will handle the contracts and all that sort of stuff.
Well, that's the
um,
thing, right? Like, I mean, I just got, I sent out like a 13 million and a 12 or a 10 and a half. And like, the thing that we realize with offers like that is like, yeah, we're going to highlight everything that, and, I'm not going to put it together like it's sloppy, but um, we're going to put everything together properly. But you got to realize too, like once the lawyers get their hands on that, they're just going to pick it apart and just, you know, really, really dive in. You know how lawyers get,
Yeah.
like maybe it's a pride thing. You're like, I don't know, like,
Yeah.
but they like to really pick things apart. So.
Yeah, that is true. So, I know we're coming to the end here, and I know you have another you got some other plans coming up. So, what are your sort of future plans for your sort of investment career? You know, you're 25, you just started, you got your first fiveplex. You know, like where do you sort of see yourself going in the next 5 to 10 years?
Yeah, just to continue growing. Like I want to keep building my portfolio, maybe dabble into the development stuff a little bit. But yeah, just in the next 5, 10 years, I think I want to be in a position where I can choose the clients because I love what I do. But I'd like to, be a lot more selective and choose the clients that I want to work with, and then really just be a full-time investor. And like I said, dabble into the development stuff if I can or when I can.
Oh,
So.
okay, awesome. Do you think you'll stick with only like multifamily development, or do you think you'll go into like maybe like industrial office, you know, single family, like like single family home tract
Yeah.
development stuff, or?
Yeah, I don't think so much the single family home stuff, but since I've been at Coble and seeing, the returns and the way that those guys like Mark and Graham and their clients, um, like the returns that they make and the stuff that they offer on, it's definitely starting to intrigue me a little bit, but I'm not nearly there yet in terms of understanding it. So for now, like the game plan is just strictly the multifamily stuff, and yeah, we'll see where it goes. But I do like the landlords have a little bit more rights in the commercial game, right? Like as you
Yeah.
know, like here in Ottawa, like in Ontario, it's just nuts some of the stuff that tenants can get away with, and that's not to say all tenants are bad. There's definitely some really bad landlords out there too, but yeah.
Yeah,
Just
it's yeah. I went to one of the tenant board meetings because I think it might have been Airbnb or something else that they were wanting to. It might not be an Airbnb or something that they wanted to change within the act, and then there was like two groups: the landlords and the tenants. And like you said, yeah, there's like there's really crappy tenants and there's really crappy landlords, and sort of
yeah,
navigating those waters is pretty hard to do.
yeah.
So yeah, where can people actually find out more about maybe if they want to invest in one of your deals that you have like in the future or something,
Yep.
or if they're looking to buy some real estate in commercial real estate in Ottawa.
Yeah. So my phone number is 613-724-0895 and email is justin@cobol.ca. And then social media is just my first and last name, just
Oh,
Justin Salazar. So you can find me there. Instagram, LinkedIn, Facebook, all that stuff.
okay, awesome. Well, thank you again for coming on the show, Justin.
No worries, man. Thanks for having me. It's been real.